How to get a $40,000 business loan with bad credit and no collateral, even if you have good credit and have collateral to offer up with as little as a 500 plus FICO credit score accepted. I'm going to be covering all of that and a lot more in this video. My name is Michael from Viral Funding Solutions. No further introduction. Let's get right into it. I'm sure you're probably thinking, well, 40,000, I'm probably wanting 50. No, I actually want 100, 250,000, a million and above, and so forth. If so, I have other videos that I've already made around this topic with other numbers like 50,000, 100,000, and so forth that I'll link to you down below in the description. But this will be a similar concept, and I'll be getting into it specifically to show you some of these rates, the terms, what can be considered in your specific situation, and so much more. So make sure you stick with me until the very end of this so you can get all the juicy details. Now let's scroll right down here. I want to go in through some of these laws, and I put that quote unquote as in this is like the key concepts or the key box here that you should be referring to. And I put this here as in there's so many people who they come to me and they're doing a specific amount in revenue. Let's say they are doing around 10,000, for example. That individual may want 2 million. That isn't realistic. Sure, you can offer up collateral to get it, but is it high value collateral? What are they asking from you? And it may not even be enough to qualify you for it. So I put these laws here to govern moving forward if you don't know how much you can get approved for and so forth. So you can get approved between 10% to 15%, and in some cases up to 20% of your annual gross sales, more in the 10% to 12% on average range. That's more on the average, as just mentioned. The reason this needs to be said at the very beginning is, again, so many people, they say they are doing a certain amount, stated revenue, the bank statements may reflect something different. So always be truthful in what you say when we're communicating. But you're asking for a gargantuan amount of money that isn't realistic, especially if you don't have any collateral. And even if that, you don't have sufficient enough where it just won't work. So that's what you usually get approved for, up to 20%, but in a lot of cases, it's 10 to 15% more on that 10 to 12% or so on average. And what else does this mean? So with specific services, a business loan, there are cash advances, which I'll be covering here in a few. So you can get faster funding, even same day instant approval. And even if you're self-employed, independent contractor / 1099 gig worker and so forth, I'll be getting into some of those details, but I'll leave more information on that down below in the description. So with some services, you can get approved for up to 75% of your average monthly sales, or even on your lowest monthly sales, lowest monthly revenue, etc., average monthly revenue. And that just means, hey, if we look at your average and we looked at your lowest month, are they comparably close? If so, we usually take the average. If you have like 50,000 on average, but you had a low month of about 15,000, how hard would it be for us to justify giving you closer to that 50,000 range? It'd be a little bit more difficult because you just had a dip. It's probably what happened. And fluctuations, it's probably down. Or it may be up on the up and coming. That may be the case. So what we look for, if we're not asking for collateral, is cash flow. How, and I'm going to be getting into some of those details like average daily bank balance, your number of deposits, types of deposits, the amount, quality-wise, etc., starting, ending bank balance, and so forth. So your bank statements become very pivotal when we're looking at cash flow if we're not asking for tax returns, 2-3 years, year-to-date financials, credit report, history, all of this information, like you'd probably see with the SBA loans. And to a certain degree, probably a recent tax return and a year-to-date financials may be asked for if you're qualifying for sometimes over 100, or usually over 150,000, then we'll be asking for some of those. But if it's anything underneath that, in a lot of cases, it's not required. It's just as like 3 months of bank statements, or 4 to 6, up to 12 months in some cases, the season, the type of business, and your avoided check and a copy of your driver's license. In a lot of cases, that's all that's required. No extra supplementation and documentation. So it's very fast and straightforward. But I'll be getting into what that may entail with some of the rates, interest rates, and so forth. So you can get up to 75% of your average monthly revenue, your lowest monthly sales, lowest monthly revenue. Usually we take that average amount. You can get up to 75%, or you can also get from 75% to 200%. So up to 75%, we have some programs where if you're doing 5,000 and above, but not 15,000 and over, you can get up to 75% of that. And if you're doing 15,000 and above, right now is what it's set at. It used to be about 20,000 and may flip-flop, but it's right now 15,000. Then you can, and this is consistent, like within the last 3 months, it shouldn't be 15 and then 10 and then 5K. It should be 15, 20, 30, or so forth. 15, 15, you see what I'm saying? Like 16, 20, 30,000, 40,000, 50,000. And I'm going to be getting into why the 40,000 is relevant in this video, as well as others. So you can get up to 75% of that, up to 200%. I know that's not always the case, 200%, but that's what would be the range. And again, it would depend on your bank statements, your background, delinquencies, if any kind of background check that goes through, bankruptcies, criminal charges, if so, how long ago, maybe it'll overlook that, and so forth. There are a lot of things in the process. 75% up to 150%. It's usually a lot of the times that 200% can be with a very good profile. You have to have substantial funding details. Usually it's up to 150%. So 50% to 150% is what you would see in some cases. So not even that 75%, they'll give you less, but they give you that room up to 150%. Other ones, 50 to 100%, 40 to 60%. I know that's a lot of the cases with like the term loans through the banks in some cases, but it's mostly like the line of credit programs online. Not all of the line of credit programs. There are a few of them when it's more bank related. 40 to 60% is a lot what you would see, or you can get 20 to 25% if you're doing not 5,000 and above, but you're doing 3,000 and above, or 3,000 in average monthly revenue, but not 5,000 over. That's for the self-employed right now, independent contractors, 1099/gig workers. You can get between 20 to 25%. And I'll leave more information on that down below, where you don't have to use a business account, checking account for business. You can have a personal checking account for business, and there's no credit requirements. And that's only for that bucket. And you may be doing 5,000 and above, but you have a personal account. Well, we could still qualify you for that as long as you meet the rest of the qualifications. But just know that you're not going to be getting more than what you can get because you don't have a business checking account. So this just depends on what you have. So term loans, these are ones where we could expect it to be in about a year's worth plus. So 1 to 2 years is a range you would see with these unsecured term loans in a lot of cases. And then if you back it up by collateral, it can possibly be upward up to 10 years. But again, 1 to 2 years, these term loans, unsecured, I'll get into some of these interest rates. And then you also see, like with cash advances / short-term loans, 4 to 24 months or 3 to 18 months, 6 to 24 months. So that's what you would expect in that time frame. So with these types of term loans that are unsecured without collateral, you could expect somewhere between 1 to 3% interest per month for unsecured. Okay, so what does that mean? So let's say you get 2 years, that's 24 months. Well, 24 months, by how much percentage are you getting on interest? If you're designated an interest rate percentage based upon all the details that we look at. So I can't say you are going to be getting it at face value. I have to have everything submitted for it to go through the underwriting process and for me to communicate with the underwriters, the lenders, et cetera, for all of us to look at this and review it. But everybody has a different percentage, and that percentage may change over time because the prime rates and stuff like that with inflation, but that's what we have it currently standing at. And again, like I just said, it may change over time, but 1 to 3% interest per month for unsecured. So 24 by 2, what is that? 48%. So that's what you would expect to be paying in total of interest for those 24 months. And to some of you may be thinking, whoa, 48%. No, I'm rate sensitive, term sensitive. I need to get somewhere between 2%. I need to get 5%, I need to get at least 10%, nothing over 10, not even into the teens. And I tell this to a lot of people. When you're asking for 40,000, even if it's another type of amount, you have to have the funding profile to back that up. Prime rates are 3.5%. And again, like I said, that may be changing over time. It may be in the 4% in time. So 3.5% is a bargain. And they gave you 3.5% plus 2%, that could be for accounts receivables, like unpaid invoices, aging receivables, 3.5 plus 2%, about 5.5%. And I know that's not the 3.75% like the EIDL loans or for-profit, nonprofit 2 point whatever in that range. It's just a bargain. 3.5 plus 2% for aging receivables. And there are other instances where if it's secured back by collateral for a term loan, that's 3.5%, which is the prime rate currently. Again, like I said, that may change, and I'll always keep you up to date. So 3.5% plus about 2 to 8%, and in some cases, 2 to 6%. So for this one, for the secured, it'd be 3.5 at the moment, prime rate, plus 2 to 6%, backed by collateral, sufficient enough, equipment, real estate, the equity, inventory, unpaid invoices, etc. And usually preferred, it's aging receivables, like these unpaid invoices for a lot of the cases when you're securing it through collateral is what we would prefer, right? Now there are other forms, but yeah, preferred aging receivables is always a given. So keep that in the back of your mind. And it's not about the interest rate in a lot of cases, it's about the benefit. Think about this. Does the benefit exceed your repayment? If I were to take funding right now for my own business, I took $40,000. And there may be a different way where you might not have to get the 1 to 3%, and I'll show you that in a second. I get $40,000 without looking at the interest rate and any of that in mind right now. 40%, well, I get 20% in interest for $40,000. This is my APR. If it's not even if it's calculated like that, if it's not, but well, if I'm asked to pay back about $10,000 in about 8 months, and now we're not thinking 2 years, 1 year, we have to be realistic and say, well, if I'm paying back $47,600 over 11 months, it's okay. Well, the benefit has to exceed the repayment. Think about this. An individual, a business owner who is fueling their business for growth and expansion, they may be opening up another location and they have a third one coming up, or they're using it to get equipment, to hire on more people. That list can go on and on. Marketing, advertising, there's so many reasons for growth and expansion, you're scaling and so forth. And so the person who's paying back $47,600 or something like that, getting $40,000, is going to be able to justify making those repayments because cash flow is fine. And they're going to be, their ROI, if I ask you the question, what would be your ROI within the next week, maybe within the next few months, 3 to 6 months from now? And I also look at the term to say, okay, well, if you got 11 months, what would it look like for you in half of that time? Maybe in about 5.5 months. How would it look like for you in 11 months? Well, I would actually be getting an extra 15 to 30,000 in month 4 when I have that loan or that cash advance. I'm going to be doubling, tripling my profit, quadrupling, even before the 11 months are over. Even at that 11 months, doesn't matter. It's like I'm going to be increasing my revenue, my ROI, my return on my investment. Even if there weren't a return on your investment, think about it. Are you cash flow positive right now? Cash flow negative. Cash flow positive, will it hurt you in the future? Cash flow negative now, but you're on the increase, so it'll be fine. So think about these things, and there are lines of credits. So for somebody using it as survival money, $40,000, and you're paying back $47,600, and you have to also look at your credit and so forth, and you only got this time probably 6 months. You're like, no, because cash flow isn't where it needs to be. And perhaps cash flow is where it needs to be. You just don't understand the landscape of what you can qualify for. So just because somebody tells you get 1 to 2 years term loans and how they sound so good, you get 2 to 10 years unsecured, but it's 25% to 50% interest. The other case we have to look at is state. Do you qualify because of the state? Would you qualify because of revenue? Would you qualify because of credit? And many more factors. And the total cost of financing when you get these unsecured term loans that you feel are going to be best because they're longer terms end up costing you a lot more than getting a shorter term loan solution. So that's why I always recommend shorter versus longer in a lot of cases, and just how these operate. So 2 to 6% lines of credit equals prime rate plus 2 to 8% in that case. If you're, whether you have, this is great for cash flow deficiencies. So if you're struggling with that, or you feel like you will a line of credit, even if you're not, lines of credits are great. And I always recommend having one on hand just to have it. And then you can also try to get approved for a term loan, shorter, medium, long, short term, or let's say, for example, you get a short term, you get, because of your funding details, you get 15 months. Now you didn't get everything you wanted, but you want a line of credit that's going to get approved for, so for this example, let's say you got 40,000 for 11 months, let's say that. And then over here, you want a line of credit that you can get approved for, but you get approved for about 30,000. So now you have 70,000 to work with. Originally, all you wanted was 50,000, but now you have an extra 20,000 with the line of credit, or you didn't get enough. You actually wanted 80,000. You're 10,000 short. So you come back and get more. We can increase you for more on the line of credit as you're paying it over time. Months go on. And if you have the term loan or the advance we gave you, you pay it back. And then we can look at refinancing and giving you that extra 10,000, or if you want more or less, we can work towards doing that. But it's all about building a relationship. So with the secured line of credit, usually against receivables, there is no set payment. You pay upfront fees to set up the line of credit, and then you pay the rate when the money is then collected, which is normally within 30 to 90 days. So that's a huge benefit if you're backing it up with these aging receivables usually. And that's not a lot of the cases with every lender, but that's what you could see out there. So now we have these shorter term loans, usually called, well, it's a classification called a merchant cash advance, or you can also get a hybrid cash advance. And these are usually given to you against your future receivables, your projections in the future as well. So that's what it's looked at a lot of cases. So we have a hybrid where we can get you between 1.19 to 1.69 or 1.19 to about 1.49 your in total payback. So if you received, for example, 40,000 in amount in funding, your total payback between 1.19, and we're going to highlight this right now. The 1.69 amount, that's if you're doing less than 15,000 right now, you're looked at as a higher risk. So that's why we give you a higher rate or a total payback. So 40,000 in funding multiplied by 1.19 through 1.49. So at the lowest you can get, it's 47,600. The highest at 1.49 currently, it's a $59,600 in total payback. No interest rates we are including into this, and you can try to calculate it that way and look at it like that. But we calculate on total payback, kind of like a factor rate, and it's less confusing, and it's much better when you're looking at it because we're not talking about a bank with the interest rates there. So 40,000 in funding is what you could expect to get from 47,600 to 59,600 in total payback. So how do you even get 40,000? Question mark. Like, what governs that? Like I said, some of the laws before, but we're looking at FICO, your revenue strength, cash flow, amount of deposits, credit checks, non-sufficient funds, if any. What are you bouncing, if anything? Remaining bank balance, starting bank balance, ending bank balance, time in business, background checks, as I said earlier, with that, those little bits of specific details, and there's more. So if you got 1.19 through a 1.30 approved for, and you get a 1.23 total payback, that would be 49,200. If it's between 1.31 to a 1.49, excuse me, here, let's move this. I was moving some stuff earlier because I had different amounts. Then, and if you get a 1.37 in total payback, 54,800, you're going to be paying back over the 40,000 that you initially got. And there's some origination stuff and so forth in there as expected, and lender costs. But that's what you would expect. Let me move over here to an example, and I'll close up shop here. But if you have any questions, if you want to get started, look down below in the description for my #1 recommendation. And if also you haven't gone started yet, I have a free questionnaire form where you can get a personalized and customized email response from yours truly on your best funding option and options, plus get a free 6-step pre-approval lending checklist to get you approved for funding much faster. So what will happen is you can fill this out in less than 30 seconds. Literally, you can be finished if you have it all there, and it'll look like this more or less. I offer more services. I just put a handful there. So it could look different over time. But what would happen is I will analyze, evaluate your response, and give you a proper email back on what you would qualify for, your best funding option and options. Very thoroughly broken down into qualifications, how it works, numbers, if any, usually there are there, conclusion, bonus tips, bonus material, stuff that you wouldn't have seen for yourself. It is very in-depth, and a lot of people love this. I've helped out people of all industries get funding, and even if they haven't gotten funding, where to point them to. FICO credit score fixes, inquiries, disputes, building business credit, getting 0% interest for 6 to 18 months through business credit cards up to 150,000 if you have at least a 680 and above FICO or so. I'll leave more information on that down below in the description, and so forth. There are a lot of options on the table. Startup funding, I'll leave that down below. How there's no true startup funding through private lenders, but what are those alternatives? So that'll be there. So an example here, and I know it's not the 40,000. I can actually adjust this here. Let me put 40,000. Because I've run through some other examples, and you've probably seen something like this in the past. And you have a year's worth and 4 months in business. Your monthly sales, it is 75K and above. And I've changed this information so I can keep it safe and secure. It's not the actual person. So 75,000, drop down, they're using it for expansion, but what more specifically, I can ask you those questions. Business industry, we'll say this one is construction. Business name, we took that out. Any additional notes you'd like to share? Looking to expand the business and increase the marketing advertising budget with more inventory too. There are many more reasons that you can use this for expansion projects. So it could be different. It could say, hey, I'm doing 20,000, but I want 40,000, or I'm doing close to 40,000, I want 40,000. But for this one, we'll say they're doing over, which is great because now that you're doing over 15,000 and above, if you need to rewind the video to watch this, 15,000 and above, we can qualify you for about 75% of your average monthly revenue. We also look at your lowest month up to about 200%. In a lot of cases, up to 150%. So it's already looking good. You're doing 75,000. Now, another question of this I would ask is it consistent? So how are you doing within the last 3 to 4 to 6 months? Does it look good? Are you dipping? Are you going high? Higher projections is usually better. That would actually get you closer enough to what you're wanting. And if you're already over 75,000, getting you 40,000 should already work. Like if you were in a situation where you're doing 20,000, you want 40,000, you want to 2x that amount, it could be a bit difficult. We could get you that with proper cash flow, projections up and everything else. But we also have to look at the credit. So if you're telling me you have 540 FICO score, 75,000, yeah, more or less we can get you to 40,000, but maybe it wouldn't be exactly 40,000. Maybe it would be just like 5,000 or so under. Why? Because your FICO is just not good. And I'll show you, I'll go through some of these like terms and the rates and how we look at this. But 540 FICO credit score, 40,000, yeah, perhaps we can get you that because you're doing 75,000. If it were 20,000 in average monthly revenue, getting you 40,000 with a 540 FICO just doesn't look like it's going to be in your cards because you're not showing sufficient payment history. You're behind on debt. You're accumulating so much of this, inquiries here, debt to income ratio, your credit utilization rate, you're not making the payments on time, you're taking too much. There's so much behind all of this. So usually a lot of this though too, you can get through a soft pull, not a hard pull. Hard pulls usually come through the form of SBA 7As and other forms of SBA funding that I'll link to you down below in the description to see if you even qualify for that. But then again, the questionnaire will be there. That's the best way to get a hold of me. So 75,000, let's say we get them to 40,000, but they have a 540 FICO, a year's worth of time in business, which is not bad. We'd like to see at least 2 years, if not 3+ years usually, but 2 years is great and above. And here's his offer. Credit is an issue here, as we stated here. This is some information I received back through underwriting / through the lenders, officers. Congrats, your business has been approved. We'll just change this amount here for the sake of this. 40,000, they got it, or maybe they got 30,000. Once you pay the funding for the 65 business days, you become a client in good standing and you may be eligible for additional funding at much better rates and terms. So keep in mind that it may not be all 65 days, it may be a little bit longer. It also depends on the term. So please review the offer below and let us know if you would like to move forward with funding or should we close the file. Kind regards, I took off the name. And it also depends on the service, what you're getting, how much you can come back and get more next time. So with that said, they may have gone their 40,000 or they may have over here gone 30,000 because their credit or cash flow is going down or is it going up? If it's going up, it helps your case. But what happens is a lot of people, they'll say, well, that's not 40,000. I wanted the 40K. Well, what you should think about is, can I use 30,000 now and then come back and get the extra 10,000? If so, then that's what you should do. A lot of people do it every single day. They come through me and they get a renewal. I help them. I point them in the direction. Now, if you're in a place where I need 40,000, you don't understand. I got to pay this debt off and I only have a week and I have a project that needs to be done within the month and I need the full 40,000. I can't come back and get more. That's understandable. Okay, there's a difference in that. But a lot of cases, people don't need the full amount in one take. So there's more examples here. We could have said here, well, this is similar to the same one that we were talking about, the 40,000. So let's say they got 40,000. Well, I'll have to change some of the numbers here, but let's keep it at 35,000 for this one. They get 35,000, term 120 payments. That's about 6 months there. Daily payment, 435, Monday through Friday, no weekends. Lender closing fee, 1,245. Your total payback here is 52,150. So they got the maximum of a 1.49. If let's say you got 40,000, but your rate is 1.49 because your credit. If you were to have at least, if you were above 600, 625 is a better barometer. If you're anything above 600, but 625 realistically is a lot better, then a 1.49 would have been a factor because of their cash flow. They're also, their time in business is less than a year. So that's why it's in the 1.4 and above range. If it were probably like 3 2+, even 3+, 4+, they're probably looking at somewhere in the 1.38, probably even less range. And then with their FICO being 600 and above, at least 625 and above, they would have gotten that. And perhaps they wouldn't have been given 6 months. They would have been given between 7 to 11 months, sometimes 12 to 24 months. So we have to look at those things. So underwriting guidelines, you can see some of the things here with the specific service. So A paper, 1.19 to a 1.30, clients with great revenue over 50,000, excellent FICO scores of 700 and above, and been in business between 24 months and above, which is 2 years, is what you can expect to pay back in that range. So 1.31 to 1.49, which is B2C to D paper lending clients. B paper is a client with revenue above 20,000 monthly, good FICO, 625, but this individual, as you saw, did not have that. They didn't have 50,000 and above. They had 20,000 and above, but they've been in business 1+ years, sure, but now they're getting the 1.31 to 1.49 range. C paper is a client with 525 plus FICO, so they're classified more in that. D paper, below 525. The rates you get vary on FICO, time in business, other credit issues such as bankruptcies, and there are more things like lender partners, other issues, number of NSFs, inquiries, negative days, etc. But there are more examples here to look through that I won't go into specifically, and I'll close up by looking at some of these terms. Terms are usually dependent on things like business type, your revenue, your credits, A and B paper for specific types of programs, weekly, daily repayments, 12 to 24 months, you must have 50,000 in monthly revenue, 675 plus FICO credit score, and 1 year's plus in business. C paper, weekly, daily repayment, 7 to 11 months, you must have 25,000 in monthly revenue, 600 plus FICO credit score, 6+ months in business. D paper, daily payments, 4 to 6 months, you must have 15,000 in monthly revenue, 500 plus FICO credit score, and then 4+ months in business. And then there's more details to this that this is just one specific service. I know there are other, like this is more of like a cash advance, and there are business loans who will look at it like similarly. So just keep that in the back of your mind. And now just to recap, how to get a 40,000 business loan. And even if it's 50, 60, 70, 30 and below and so forth, you have to understand that there's bad credit approvals, yet they come with a medium to higher rate. And you're just over leveraged and you just don't have a place. No collateral, they can be medium to higher rates. If you want to drop that and you're rate sensitive, there are ways to look at that. And some of the laws that I covered already, 10 to 15%, and in some cases up to 20% of your annual gross sales, which you get approved for, more than the 10 to 12%, the up to amounts, term loans, the 1 to 3% on interest, the lines of credits, prime rates, or if not prime rates, it's 1 to 3% unsecured line of credits, usually 6 to 9 to 12 months. And this is stuff that I can help calculate for you and get you in a ballpark range. Merchant cash advances, hybrid cash advances, we spoke about that, how to get faster funding, and so forth. So that will conclude everything in this video on how to get a $40,000 business loan / cash advance. And this also can pertain to other amounts you're looking to seek. If you need help getting business funding the right way, check for this questionnaire down below where I will get a hold of you in time. And for all other questions, comments, or concerns, please voice them to me down below in the comment section. And look in the description to get started. That's where all the information will be. If you have not subscribed, please go ahead and do so. Click that bell notification icon so you don't miss any future videos I will be coming out with. If you found value out of it, please give it a thumbs up and share this with others who you feel will get value out of it. If they're a complete stranger, that's okay. Friends and family, sure. And this will be of great value to them because they will finally understand like why they're getting the interest rates or the rates total payback, the terms that they get, and so forth, and what are the options on the table. So that is everything from myself. Thank you for tuning in. Talk soon.